Hey, what's going on, everybody? It is Friday, yeah, June 3rd. You enjoying this roller coaster ride? Because that's what it is. We're up, we're down, we're up, we're down, we're down, we're up. All right, let's break it down for you today, folks. I guess you call it somewhat of a disappointing day, and I'm not just saying that because of the market reaction. And I'll tell you why I think the market went down as hard as it did today. And I do not think it was related to, actually we had a very strong jobs number, 390,000 jobs, payrolls. That was way above forecasts. Actually, leading up to today, there were some whisper numbers out there saying, hey, there could be a negative print in the payrolls, but it came in really strong. Was it 390 or 395? Right around there. So that was a good number. And again, payrolls and the labor market, it doesn't seem to be indicating whatsoever any kind of a imminent recession. Even if you talk about, or if you look at gasoline demand, I spoke about that yesterday. Even at these high prices, demand is down like 3% year over year. That's no big deal, all right? I just looked at the loan data. It just came out a couple of minutes ago from the Fed, and we had a 45 billion increase in loans. I think loans have been up for the last 9 weeks in a row, and they've been up something like for the last 16 of the last 17 weeks, but the last 9 weeks in a row up almost 300 billion. I think 295 billion in loans. Loans are at a record high. They're growing at the fastest rate in 2 years. And even commercial and industrial loans, which I think are a barometer for business activity in general, those were up again, a big 17 billion. In the last 7 or 8 weeks, those things are up like 105 billion. They're growing at the fastest rate in 14 months. So, I mean, if you look at the loan data, credit demand is really strong. Now, you might say, oh yeah, Mike, no kidding, credit demand is strong, prices went up, you got to borrow more money to finance whatever, inventory or your business. But look, it also comes down to credit worthiness. You know, it's one thing, this is again, this is, you know, I talk about this kind of stuff all the time. There's two sides to the equation. You know, it's like when we talk about inflation, everybody's like, oh, inflation, it's terrible, I got to pay more. Yeah, but somebody's getting paid more. Same thing with interest rates. Oh, interest rates are terrible. You know, my credit card payments are going to go up. Yeah, but somebody's receiving that money. Same thing with the, you know, oh, the loans are going up. Yeah, Mike, because everything costs more, so you got to take out more money. But credit worthiness, the banks, you know, that's the number one criteria for the bank. If you walk into a bank, you might want to borrow money. You know, if I want to borrow $100 million and I walk into my local Chase, you know, they're not going to lend it to me. I just, you know, they're not. You know, I'm not going to qualify. So, I mean, you got to have the credit worthiness. And if you see loans are going up week after week after week, I mean, it says something. It's not just about, oh yeah, they're going up because the nominal level of prices has gone up and so you need more money to finance this or that. Yeah, I understand that. That's a factor. But I mean, the credit worthiness has to be there. That's the first thing that the banks are going to have to justify that before they're going to give any loans. So keep that in mind. So all these things I just mentioned, you know, loan growth, gasoline demand, labor market, all that stuff seems to be pretty strong. It doesn't give any indication of a slowdown in the economy. Now let's get to today. And I said, I don't think it was about the strong payroll number. Everyone, you know, that was what was written up in the commentary that I saw online in the news reports and stuff. It's like, oh man, you know, now the Fed's really going to have to hike rates because. And we saw bond yields go up, and it was, again, this nonstop chatter by Fed officials. Now they're saying, hey, you know, we might hike 50 basis points in September, you know? And 2 days ago it was like, yeah, they're going to stop. They're going to stop in September. Now it's like, oh, we're going to go 50 in September. And then again, you know, so it's like, But even with all that, when we had the initial reaction to the strong jobs number and the market sold off, it was starting to come back. And then Biden, this is what I think, and maybe like maybe I see too many steps ahead compared to everybody else. I don't know, or you know, I'm very much a fiscal guy, so maybe what I see is just like not apparent to most other people. But like he started talking about, here's my inflation plan, you know, blah, blah, blah. And then he was saying like, we got to cut the deficit. We got to cut the deficit. And I'm going to tell the Treasury to pay down the debt. And I was like, whoa, red flag, big time red flag, big time red flag. And I sent out an email to my subscribers. I said, you know, this is potentially a big problem. I mean, with this whole thing about, you know, yeah, you cut the deficit, you're going to cut inflation, but you're going to cut inflation as a consequence of throwing the economy into a deep recession and sending millions of people out of work. I mean, if that's your plan, if that's what his advisors are advising, and they may very well be, because I think they're stupid and they don't know anything. Yeah, you're gonna tackle inflation, but you're gonna throw the economy into a deep and long-lasting recession. First of all, as I've been telling you, the deficit is already down almost $2 trillion compared to last year. All right, or it will be, because we're gonna end up with like a 1 trillion something, just about a 1 trillion deficit for fiscal year 2022, which ends at the end of September. And last year we had a 2.9 trillion deficit. So, you know, we're going to be down almost 2 trillion already. I mean, we're trending there. Okay? So that's number one. Number two, what's this talk about? He's going to, you know, this talk about, I'm going to tell the Treasury to start paying down the debt. He's taking this right from the Bill Clinton second term playbook. Okay? When Bill Clinton thought he was going to be really cute and smart and he was getting advised by this wacko Dick Morris, political consultant, saying, oh, we're going to counter the Republicans. We're going to do we're going to call it a triangulation. We're going to do exactly what the Republicans want us to do, and then there's going to be no need for the Republicans. So we're going to balance the budget. And that's what Clinton did in the years from like 1996 all the way into, finally 2001. And that budget balance, I mean, that destroyed, that crashed the stock market. That was the bursting of the dot-com bubble. That crashed the stock market. That sent the economy into a deep recession from 2001 to 2003. And we only got out of that recession in 2003 because of fiscal stimulus that George Bush, remember, he was sending people $300 checks. At that time, that was like a big deal because we had 9/11, and then he was sending out checks and stuff like that. So this idea that Biden now is like, okay, we're gonna balance the budget. Like his advisors are telling him that's gonna give him some kind of, because he's trying hard to find a political angle to help the Democrats for the elections that are coming up in November. Right now, the biggest negative for the Democrats and for Biden administration is the inflation situation, and the Republicans are pounding on that, and they're winning with that strategy by pounding on that. So Biden's telling the Fed, you got to be really aggressive, and now he's talking about, you know, we got to cut the deficit. So that's potentially really, really bad. Okay, I mean, there's no way to sugarcoat that. However, I will tell you this. First of all, how does Yellen pay down the debt when, you know, the budget is already fixed and there's the government spending, monthly government spending is, you know, that's a fixed number right now, and we're running at about $600 billion a month. So I mean, she's not going to be able to pay down the debt and sustain current government monthly expenditures before draining the Treasury's account at the Fed. And then if they want to replenish it, they're going to have to issue more bonds, and so that just expands the deficit again, right? So I mean, it can't really happen. I mean, it could happen in a new budget, you know, when Congress does that. President has to submit a budget. The budget, you know, the current fiscal year ends at the end of September. A new budget has to be submitted Congress, and that would have to include spending cuts, like deep spending cuts. So I think a lot of what he was saying today, even though he might believe that, like, and he might really want that to happen, like, let's balance the budget. There's no way, you're feasibly going to do that now with spending priorities already set. With spending is already set for the year. I mean, there's no way you're going to do that. And if anything, he keeps sending money over to Ukraine. That's just increasing the spending. So when I first heard this, I said, because when he started to speak, this is when the stock market really started to tank. And I think it's also a factor that investors probably don't think he has a real plan to deal with inflation. My plan basically is you got to have patience. I mean, we're not seeing some kind of acceleration in wage growth, okay? Wages, real average hourly earnings are higher than where they were before the pandemic, but they're down from, the peak from last year. And we're not seeing an acceleration in wages. Mainly, this is, if you really, look, let's face it. The inflation we're seeing now is a direct result of these sanctions that he put on Russia, banning imports of Russian oil. We're exporting our surplus. Okay, I've been talking about this for months now. I mean, we're at 1.4 million barrels a day of petroleum exports. We were just recently, the week before last week, we were over 2 million barrels a day. All right. So we're net exporting our surplus, which is crazy. I mean, he could put a ban on that. He's not doing that. The sanctions we've on our own. We've imposed our own ban on Russian oil. Europe is imposing a ban on Russian oil. So we're going to end up exporting more of our oil to Europe. Prices are, this is all the result of the sanctions. Wheat, he's perpetuating this war in Ukraine when the war, actually, we should be now engaged in diplomacy and trying to end this thing. The United States, as the superpower of the world, really, we should be involved in diplomacy and trying to end this thing. Wheat and other commodities have been either shut down or curtailed supply as a result of sanctions, as a result of war. I mean, all this stuff it's on him. And it's not about the deficit. But, now, and look, I'll be honest with you, we've got to follow these fiscal numbers really, really close. Let me update you, as long as I'm talking about the fiscal. The deficit right now is back up to 727 billion. It jumped by 206 billion since April. So for those of you who are worrying about, hey, what happened to personal savings? What happened? We've been hearing a lot about that recently, and I spoke about this on a video. Oh, personal savings just dropped down, to the lowest level since, what are they saying, like 2013 or 2014. Well, guess what? That's lagging data when you hear that, though. That's months behind. I'm telling you right now that it just jumped up another 200 billion because the deficit since April, and I've been talking about that. Why did savings go down? Because the government pulled in this huge tax haul. It took the money away from us. That's another thing about, if you want to reduce the deficit. Another way to say that is reducing the financial balances of the non-government, of us. Think of your checkbook. For the government to reduce its deficit, it has to shrink the amount of money in our checkbooks, in our accounts. That's what happens. So, of course, the economy, if you do that now, if he does that now somehow, and I don't know how that would be done, because, again, all spending for this fiscal year is already fixed. It's already certain. We know what's going to go out. And, they add to it by order, like they can add to it like they did with the 50 billion they sent to Ukraine. But, they can't cut it. I mean, it is what it is. You can cut it in the next budget. So he's talking just, nonsense here. It's what he wants. I truly believe it's what he wants, because he doesn't understand, or he believes that that's like a political, he's going to score some points politically by telling everybody. And you can see it now, because there's, White House blurbs that come out saying, we're the only, administration that has dropped the deficit by over $1 trillion. No other administration. Like, he's bragging about that. But that trillion, again, I mean, that's the government saving its own money. But that's a reduction, $1 trillion reduction from the financial balances of us, the non-government. So nobody in the administration understands that. This is classic old mainstream economic thinking. He believes it's political points that nobody cares. They care about inflation. They don't see the connection between inflation. I don't think they see the connection between, I don't even think they care between the budget and inflation. Maybe they do. I could be wrong. I think they know where it's coming from. I think they know it's sanctions and all these things that, we're destroying the world economy with all these sanctions. So anyway, where does that leave us? Basically, it leaves us where I've been, at the same place that I've been talking about now for the last couple of weeks, is that we're running at $600 billion a month fiscal flow. The deficit is going back up. We're at $727 billion. That's a positive development, because it means there has been an additional $206 billion added to the financial balances of the non-government. That's us. So that's a positive. I don't see, if Yellen wants to pay down the debt, I think it's very limited, the extent that she can do that, because Treasury has to make these payments that are already set in the budget every month. And so it's just talk. It's just talk. So I think you still have to, have a cautiously bullish outlook towards the market. The other thing today that was negative is Elon Musk said two things. Number one, he was going to lay off 10% of his Tesla workforce. And number two, he said, I think this was his exact quote, the economy looks super scary or super bad. Something like that. Something super negative is he feels like. He said he feels like, which I find that to be for a highly educated engineer. And engineers are all about measurements and facts and measurements, right? To base an economic outlook on feelings. I mean, it just struck me as kind of ludicrous. Like, here's a guy, he's this brilliant, science-minded engineer, but I'm going to make, and that's what most people do when it comes down to economics, let's face it. So he's like, I'm going to say that the economy feels like something super scary or super bad. Feels, looks, very figurative, I just thought that was funny. Anyway, look, he might be saying that too because he has to justify laying off 10% of the Tesla workforce, and he said, hey, it's not me, it's the economy. Like, it's a way to kind of cast responsibility off onto somebody else. Hey, it's Biden. Look what you did to the economy, or just whatever. It's not me. You put me in that position. I got to do it. Because the economy, it feels like to me super scary, super bearish, something super bad is going to happen. I got no choice, right? So it could be something like that. Anyway, hang in there, folks. Come on, let's get through this thing. I think everything's going to be all right. I mean, it's just sad. It's sad, man, that this is still the freaking mindset. Like, we got to balance the budget. Look, I look at these numbers every day, so if I see something happening really bad, like, I'll let you know. Right now, it's status quo. And I think, like I end up saying in the last, 2 weeks, you got to buy the dips. All right, bye. Have a great weekend. Bye.